All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to give you a little bit of a heads up. So you have to excuse me really quick, or excuse me this morning in the event that dogs start going crazy. Our palm trees need to be trimmed. I hate palm trees. Do you guys, who here likes palm trees? Anybody like palm trees? Anybody? They are the most useless. No, they're non-functional big plants in your yard, and I've got 6 of them, and you got to get them trimmed, and they just shed, and then it's ridiculous. Anybody have do it's very common here where I live, but does anybody have palm trees? Anybody have an opinion? I hate them, loathe them. Carl says they F up your pool. Yeah. Oh my gosh. I mean, I jump in my pool on a daily basis just to clean off all the garbage from at this time of year. It's such a nightmare. I mean, but then if they're really mature, and then you got to get them trimmed, or get them remove them is like, a lot too. So it's like, do you keep them and continue to trim? They're just such a pain in the butt. I don't even know why people ever put them up in the first place. I guess it was the thing to do maybe in the 80s, 90s, I guess, maybe. Yeah, Alex says they're used in Portugal near swimming pools and gardens, but not really useful other than that. It doesn't make shade. Like, it doesn't even make shade. Like, if you want shade, put up a different tree. Bryce says, I used to live in California. Now I live in Iowa and I miss them. I guess I could see that. Yeah, I could see that. I guess living in Texas, I kind of miss seeing them, but owning them and seeing them is a different thing. It's kind of like a boat. You have a boat and you don't want to have a boat. You want your friends to have a boat, right? John says date palms are awesome. You know what? Actually, date palms are the much better option. And we had date palms in my other house just a few years ago. We did a lateral move, basically same price house 2 miles away, just to be for location reasons. And that house had date palms, and I really actually enjoyed those. Believe it or not, they're tasty. Have you ever had them? Anyway. Oh, I'm sure. Anyway, okay, sorry. Didn't mean to. I was just giving everybody time to get here. So now that everybody's here, or most people are here, I'm going to get started. So, but I do want to apologize. These guys are out here climbing up these trees, cutting down palm leaves. And if my dogs start going bananas, you know the reason why, and you have to excuse me. So it's once a year type of thing. So let's talk about gold falling pretty aggressively and Bitcoin's rallying. So you can see silver and gold both broke down. Gold broke down through the 1755 level. Now, I know we've been as low as 1750, but we are at 1755, right? So you guys know that we're basically hovering around support. So the next support below this is 17 and a quarter. Like I said, this is a bear flag. So we have to start thinking, just so let me stop here and let me give you a little teaching really quick. Teaching, instruction, coaching, I don't care. What does a bear flag or a bearish pennant right now, what does that do for us as traders? The bearish pennant that you see there shapes our bias, right? Like we already had a bearish bias from the push lower, consolidation, the holding lower. We already had that bearish bias, right? But unless you're going to trade the flag and just say, screw it, I'm not going to look at anything else. You're right now, just a bearish bias is to really, oops, let me pull it up really quick. The bearish bias is just really to help us shape our intraday, our intraday biases. So we know that, hey, gold's trading heavy, therefore the dollar should stay relatively bid realistically. So, you may be short gold, and maybe you got short gold and now you're going to try to stay short for a longer period of time. But, this bias is really going to keep us in the, dollar bull camp probably a little longer. And so that's for me, that's what it does. Now, what will worry me is if we get a false breakdown today and then we rally back to, this 1800 over the next couple of days. That realistically can happen. I don't want you to get too comfortable down here, but it is bearish. And next target will be 1728. And I still think, resistance will be a couple places. Resistance is going to be at the breakdown point, which is 1777, or we'll call it 1775 just to keep it easy. And then 1800, okay? And that's key. We need to stay below those levels to keep a bearish bias, right? Okay. Bitcoin. Now, the reason why I wanted to talk about this is Bitcoin's actually moving higher as gold is moving lower. We continue to see that divergence between the two. Chad in our chat room said, "Hey, does that mean risk on?" With a question mark. And I think that's a good indication of risk on right now. Is Bitcoin up, gold down? Let's toss the old safe haven currencies or safe haven instruments, and let's buy the other one, right? The most risky asset, right? And as you can see, S&P is at all-time highs right now, trading at all-time highs. I mean, S&P could realistically break 4304 today, which is our resistance. So 36,500 is Bitcoin resistance. And obviously after that is 42. Yes, we still have to stay bearish. Yes, it may be bullish intraday, right? It's still bullish intraday, guys. Just because, overall we're bearish while it's below the 200-day moving average doesn't mean that Bitcoin can't continue higher. Support is going to be 30,000, same as you guys know. That's key. By the way, some of my friends think that some heavier regulation on Bitcoin is coming down the pipe. Obviously, the price action isn't telling us that right now, right? John said you can blame the palm trees on Hollywood. That scene where the drive down the street and all the huge, tall palm trees on both sides. Yeah, it's true. Very true. We were having a palm tree conversation. For those of you that were running late, we were having a palm tree conversation waiting for you guys. So plus my palms are getting trimmed today. So it's annoyance. But what I'm happy about is I'm going to clean my pool today, and it'll probably be the, heaviest cleaning I'll have to do in a while. All right. So I was talking about the euro and how I think we're going to be consolidating here like this. And I think this is realistic to believe. If you guys want to be long the dollar, long the euro, I don't think that's a bad idea at this point. As long as we stay above 118.75. So I'm going to write down 118.75. It is still a bearish bias, but I don't know if I'd be short right now. I mean, if you can buy it, for a move back up towards 119.25, I think that's not a bad, trade. Obviously, if you get below this 78% retracement, you don't want to be long anymore, because then we're going to just take out at 118.50, right? So, or 118.45. Okay, resistance right now is any move back up towards 119.60 would be resistance, but I'm going to say intraday resistance will be 119.15. 119.60. And the reason why I say 119.16 is because this previous support that should act as current resistance. You can see all this. You can see all this. You can see all this stuff, right? You know, this is just all an area. So I think we're going to struggle up there before we make it up towards resistance here. Okay. Look at the S&Ps at all-time highs. Why not? Why the hell not? Right? Right. Sterling. So we went as low as 138.14. That is the 88% retracement. It's 138.11. Analysis last night. We were once again testing the 38.68 level, and a break would put the 138 level into play quickly. Well, we basically went to 138.11. So I think that's probably close enough to 138 that we're going to get near term. Resistance will be back up here towards that 50%. Remember, the 50% was holding us up for so long. So that comes in at 138.93. So I'm going to say 138.10, 138.93 or 90. It's probably good enough. Bearish. Aussie found support at 75 cents, ahead of 75 cents. Any move back up towards 75, this low right here, 75.60 should find resistance now. So 75, 75.60, oops, shoot, 75.60. That is resistance today. What I think's happening here with the Aussie, and by the way, it's getting a little bounce right now, but I think we're gonna do this, right? It's eventually a flag that's gonna move its, work its way lower. That's what I think is gonna happen. So, I mean, it will happen. I'm just, it's kind of what I'm preparing for with the Aussie. Kiwi. So I thought we'd find some support here at 70 cents. We flushed through that a little bit. I guess it was just to probably take out the stop. So this is 69.80. Kiwi's been kind of underperforming the last few days. You saw it in the Aussie or in the Aussie New Zealand, but 69.87. So I'm just going to write down 69.80 right here. Any move back towards 70.50, you can see it all right through here. Hourly supports, hourly resistance. That's 70.50. That should find resistance now. Hold on really quick. Let me check something really fast. Euro's consolidating. Canadian yen's. If you guys are short, just think about that for a second. I think that was the neckline right there. Euro Aussie's coming back off again. Really struggles every time we get above 158. I mean, I have to imagine it does because stocks are so strong. But man, the day that stocks roll over, you guys have to be long. Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. Those have to be on your radar. I'm just saying, guys, the day that the stock market starts to turn, you guys need to start really thinking about being long these. And I mean, I'm long Euro Aussie, Euro New Zealand right now. Small positions, they've always really for the last few weeks, they've been starter positions just to kind of track the market. But has me keeping up on them. But these currency pairs are going to rally so hard when stocks find some sort of top. I mean, look at the Euro Aussie. This is a triangle breakout, and we're just consolidating this triangle breakout. We break this 200-day moving average. This thing's gonna rip so hard. I mean, that thing's gonna be, probably up 400 or 500 pips really quick. And that's, you can see I have a radar or alarm set here above the 200-day moving average because I want to be notified. I really want to be notified when we break it. Even though I've logged a little bit, I definitely want to be long more, Okay, sorry guys. It's early. Still early. Where am I at? Dollar Canadian. Still bull flagging. We should have support back down here at 123.25. Resistance. Looks like the Canadian's kind of stalling here. You know why? Because look at freaking crude oil. Every time you think crude oil, every time I think crude oil is going to start to back off a little bit, it doesn't. 124, 123.25. Okay. And it is bullish. Swissy. Resistance. 92.40. Support. 91.40. I mean, these are all just flag patterns. That's why. The US dollar Norwegian krona, I'm a little bit more hesitant about. Sam, we got to get above that 200-day moving average. You guys know that comes in at 866 right now. So I'm going to write that down. 866. Support should be, I mean, we're already testing support right now, but really support's going to be around 850. So I'm going to write that down. 850. 850. 850. 866. It's the 200-day moving average. So I'm going to keep this one range. Dollar MEX really needs to get above 1992. That support is at 1960, 55, 70, and then 50, 70, and then 56. So I'm going to write down for now, 1970. Oops, for now. Dollar yen. This is my chart of the day yesterday. This one, I'm assuming we're going to be right where we're at right now on Friday. And, either it's, we're going to have a miss or a big beat. And then we're going to spike up towards this resistance up here. I'm assuming on Friday, this is what's happening. We're going to be mid-range, and then we're going to either break down through the support or going to break up to 112. And just keep that in mind if you're if you're trading any of the yen pairs going into Friday. That would be my thought. So 111, and I'm going to write down 108, 109.85 for now. I know that spike low down there. I understand that, but I think that, you know what, channel support's probably a little lower anyway. I'll match that low, 109.75. And I think you kind of stay away from this until Friday. 111. 111's resistance for now. Dollar index. $91.50 resistance. And this spike high right here and today's high is both holding. So I'm going to put in 92.20. 92.20, then 91 or 92.50. I know I could write 40, which would be the trend high. I just think that resistance is really here. Actually, you know what? I should probably put 92.65. That's what I should do. Or by the time we get there, 92.60. Again, I know right here is 92.44, but I really think in the event that the dollar just rallies for whatever reason, you have to be careful of, like, you know, this trend line coming in, and then we get some sort of false breakout, something like that. I'm not saying that's what's going to happen. I'm just saying that's what I'm, you know, I worry about that trend line right above those trend highs for that reason. Probably even make that go a little higher to match those highs. So anyway, you guys get the gist of what I'm saying. And I'm going to keep it in range. Ooh, wait. I know we have bull flags everywhere, but the dollar index is going to have a more difficult time as an index because you have some currencies that are more real rate sensitive, like the dollar yen and dollar Swiss, that may not necessarily move with the dollar index itself. So I think you got to keep it neutral for now. All this resistance was at 91.90 yesterday, and we broke it, so that should be support on the way back down. Okay, let's talk silver. And then we're going to talk Turkey. Just kidding. So silver trying to break down through its support. So 25.50 is support. That was at held. I know we've been writing that down, so that becomes, as of today, very important because we went there and respected it. So resistance, I'm just going to write here, these highs right here, 26.27, then 26.50. S&P, hey, look at that, 4,300. Imagine that. So 43.04. Then next resistance is 43.45. 43.04. 43.45 is bullish. 42.60. There you go. Bias chart is finished. And I have to admit, the dollar just holds up really well despite all this. So, Stelio, Steve, good morning, gents.
Hello.
Good morning.
Hello. Look at this. The S&P up. Imagine that.
What? Really?
I swear to God.
Yeah.
There must be glitch. There must be glitch with your trading view.
In the Matrix, you mean? Yeah.
That as well. Mainly that, to be honest.
Yeah. So anyway, well, we're getting up towards. I felt this confluence up here is going to hold, but I don't know. We'll see if it's going to hold or not. But some pretty big resistance up here. What are you guys thinking?
I think it's all about once again payrolls on
Yields?
Friday.
What?
Yields, of course, they're still below 150 barely, but payrolls on Friday, and it was who was it? Barkin, who just said that if we get a good jobs report in the next couple of months, then yes, we taper. So
for what it counts, if it counts, for what it matters. On Saturday, I was invited in a in a baptism, and we were a lot of people there. One of them is a guy I know very well. We've been vacationing together for many years, and I've been friends with his daughters. He's more than 60, like 65 years old. He even used to be a BOE member. So these guys still very actively into economics and in talks with all the people that are the decision makers. He told me that the Fed will be tapering October.
Okay.
With confidence, he told me that the Fed will start tapering the asset prices, the asset purchases. September,
and the asset prices
October.
too.
Yeah, right.
That's actually what I told him, that if that happens, then yes, that's going to be the effect. He was also very confident that inflation is transitory. So I'm just forwarding the essence of the conversation.
Okay, good. The question is, what does the market price? What does the market think? Is tapering well, it depends on the size of the tapering, right? But if they do taper in October, will that catch the market by surprise? Do you think? Is the market expecting?
I don't think there is any chance they will taper in October without having well in advance prepared the market for it. Now, the question is, even if they do prepare the market for it, will the market react well? I think it probably won't. Now, keep in mind that this is a very brilliant economist, the guy I'm talking about. But as many of those guys, he has been in, or let's say adjacently to this system for many decades, right? So there are influences from there. Irrespective of that, I do value his opinion, and he seemed very confident about it. So let's see. Now, as I've said before, I'm not against the idea that they might be doing any of that. The issue remains that I believe.
Steve, I'm going to let you take over while you continue on your story here.
Absolutely. What remains to be the case is that I believe that no matter what the Fed does, they will remain behind the curve. And that's the problem. So it's not that I don't believe that they can actually start tapering asset purchases in September, October. I just believe that whatever they're going to do is going to be underwhelming in comparison to the data we're going to have in hand. So that means that I have no reason to really change my bias, even if he's 100% on point in what he says.
Okay, interesting. Very interesting.
Yeah. Don't you think with so much money given away, inflation is here to stay? Laura is asking. Laura, we've talked about this before. Listen, everything that has to do with inflation is completely distorted. it begins by the fact that education having to do with inflation is very, very poor on purpose. And there are several misconceptions out there in the market. First misconception being that that disinflation or deflation is a bad thing. The US went through its best century being most of the years in deflation, up to like 50 years ago. Deflation is a natural development of productive economies. Whenever you have a productive economy, oppositely what the Keynesians try to teach, you have deflation, especially when along with economies that become more productive, you also have population aging. So the problem begins by the fact that for some reason they've passed as an axiom that deflation is a bad thing and it's an abnormal thing. Deflation is a good thing and it's a very normal thing with technology. I mean, think about any technological, any of the things we produce that have been around for at least several years. As time passes, we produce things better and cheaper, right? So deflation is a natural evolution of a well-functioning productive economy. Even the fact that we have positive inflation is an indication that monetary policy is extremely inflationary. Because if monetary policy was neutral, we should have had zero or even negative inflation for many, many, many years. Now, add to the mix the fact that inflation is tragically underreported because they've toyed around with inflation calculations multiple times for that exact reason, to make sure that inflation is underreported. And, you get what we have. So, to go back to your question, because the introduction was very relevant to your question, do I believe that inflation is probably going um, to start dropping at some point in a few months back to something that looks more normal? The answer is yes. I believe that there is a good chance that it will. Is the 2% reported inflation, though, normal? The answer is no, because whenever you see 2% reported inflation, one thing is for sure, inflation is much higher than that. And in comparison to where inflation should have been, which should have been negative, it's still a very, very high inflation rate. Anyhow, let's go to the charts. Stelio, do we have anything else before we jump on the charts? Anything having to do with upcoming data, so on and so forth? Okay, I just see that he said he has to go pick up the kids. Okay, so we talked yesterday. Let me make my usual introductions about what has happened. We talked yesterday about broadly two things, right? No, actually, we talked about four things, if I have to put them in order. One is that several FX pairs, and not only other instruments as well, are well positioned for a continuation of the dollar rebound higher. Check. So far, we've seen the dollar indeed increasing from where we left it yesterday. We also said that was the first thing we mentioned. The second thing we mentioned is that clearly dollar moving substantially higher and equities continue to move unabated higher is something that probably is not going to happen. I mentioned specifically that it can happen for a short period of time, or it can happen that dollar might be moving higher in a in a rather slow manner, while equities might be slowly creeping higher. But it's very unlikely that the dollar is going to be moving strongly higher and equities are going to be doing the same, right? So far, we've seen the dollar indeed moving higher and equities remaining very well bid. I doubt this can happen. This can last for much longer. That doesn't mean that they have the ability to predict what can make equities turn lower, right? Now, another thing we mentioned was crude oil, right? We gave a little bit of the spotlight to crude oil yesterday, mentioning the importance of this little ascending channel on the daily chart, and then we also had a look at crude oil on the 4-hour chart, mentioning specifically that this horizontal support area at 72.50 is important. We dipped below that for like, what was it? Not even an hour. And now we're recovering from there. So as I said yesterday, we need to see a break below 72.50 to actually trigger some kind of a bear signal. And obviously, like 1 hour being below it doesn't constitute for my type of trading a bearish breakdown, right? So what I said yesterday about crude oil remains. At the same time, we do see all the divergences we already had in place, but no breakdown confirmed yet. We also talked yesterday about the possibility that yen pairs should continue with one more leg lower before moving higher as a more probable scenario. So far, we have seen the USD yen pulling further back from this confluence of resistances at 111. Right now, admittedly, I'm not saying that this move lower is like impulsive in nature or whatever, but combine that with the fact that things are moving lower against the dollar and the dollar is moving somewhat lower against the yen. We have seen, let me pull it up. We have seen this confirmation of a rejection. We showed yesterday the main yen pairs, and we saw that all of them were at important pivot areas. So euro yen has got rejected from the pivot area we were mentioning. The pound yen did move even further away after getting rejected from this descending trend line resistance. The Aussie and the Kiwi yen, let me pull them up, have done the same, right? Here's the Aussie yen, here's the Kiwi yen, which leaves open the possibility that in all of those, or in most of those, we're going to see a lower low before we can actually continue moving higher. So keep that in mind. I think this is a theme that's currently in play. I don't consider this to be a long-term theme, but I do consider it to be a theme that's interesting for those that want to trade with a rather shorter term time horizon. Okay. Steve, please look at the GDX and SILJ. Do you have a line in the sand to get? Yes, absolutely. Let's have a look at them. Let's have a look at all of them, meaning GDX, GDXJ, so on and so forth. So here's the GDX with what we drew the last time we had a look at it, which was several days ago. And as you see, technically speaking, nothing has really changed here, right? Here's the GDX. Here is, you talked about a line in the sand. We know that this confluence of supports at 3150 is extremely important. And last time we had a look at it, we were over there and they said that, it is very likely that we're going to see a continuation lower towards that level before we stabilize and move higher. So there it is. Now, I know you didn't ask for it, but since we're at it, let's have a look at the GDXJ. The GDXJ remains within this larger formation. It has pulled up significantly more than the GDX, but that is to be expected, right? We know that in essence, the junior miners are very well correlated with the senior miners, but they are like a higher beta play, right? So whenever we see usually whenever we see like a move higher in the senior miners, you can then get that exacerbated in the junior miners, or vice versa. So keep that in mind. Next downside area of support is roughly here at 42.70. I do believe that it's a matter of time for us to continue moving higher, but for the time being, there's no technical indication that something like that is about to happen, right? So I wasn't looking to buy any of those once we saw that turn lower immediately, and that hasn't changed. If I was looking for a shorter term trade in any of those, I wouldn't be buying them yet, right? Now, having to do with a longer term play, I more or less think wherever you buy them at current levels, you're going to find yourself being deep in the money sooner rather than later, right? But I know that not everybody has the same time horizon as I do. So, I always need, try to distinguish between like shorter term, medium term, and, longer term outlook, because, each trader has a different time horizon. Okay. Here is SIL, right? The silver miners. You can see that we're still within the context of a larger descending channel. Significant area of support is where we currently are at 41.50. We break through that, then the next one is at 38.70. Very, very important. Last time we had a look at those, I mentioned exactly those levels, and that's why we drew all that. And I did say that, the line in the sand is obviously this trend line support, which currently passes roughly from 36.80. We're still some distance from that. And yes, we can actually make it there. It's not unlikely, right? And here's the SILJ, still within a larger symmetrical triangle. We're not that far away from the triangle's trendline support, which I think will very likely produce some kind of a reaction. Now, my longer-term bias hasn't changed at all, but on the other hand, as I said, when the dollar reversed like almost a couple of weeks ago. No, it's a little bit less, like 10 days ago. That immediately changed my short-term bias. I said immediately that I consider this reversal to be reliable, meaning that it's a true reversal of a shorter-term type of thing. But I do believe that you shouldn't be fading it if we're talking about the shorter term. And I'm not seeing an indication that you should be looking to fade the dollar yet, right? I think that once we see another extension higher in this dollar move, that first of all, this is likely going to be the last one before the longer term trade, which is being short, reestablishes itself. And trust me, when I believe we're there, I'm gonna tell you in advance, and I'm gonna be the first one that's gonna start looking to pile into short dollar positions, because my fundamental bias remains strongly bearish the US dollar for various reasons. Now, another thing I wanted to mention yesterday as well, but I completely forgot about it, is natural gas. We have been monitoring natural gas for quite some time, and you remember how bullish have been. You see that now we've tagged the first upside target after breaking through the triangle, the 127% extension at 3.7. I do believe that there is more to go here, with 4.1 being the next upside target, and 3.37 being support from this point on. So keep in mind, this is a nice setup at play. I think it's working out quite nicely, and I think that for no reason you should try to fade it. Okay, keep that in mind. Now, Malia, out of curiosity, if you don't mind, where's the name from? I mean, what's your origin? It's an interesting name. Hawaii. Okay, I thought that it's something like that. Is it a male or female name? Okay, I thought so. Okay, nice. It's a nice name. Okay, so you asked about the Kiwi CAD. Last time we had a look at it, and nothing has changed since. I in essence pinpointed to the, in my opinion, corrective nature of the move lower. As you see, of course, since this is a descending wedge, the trend line support keeps, slightly moving lower on a daily basis. In a few days, this is going to be confluencing with the 61.8% fib of this move higher, roughly at 852. So bottom line, short term, the trend remains lower, but I think there is a very, very good chance that we're not far away from finding some kind of a tradable bottom and seeing a move, a substantial move higher. So bottom line, short term lower, but I do think that there is a very good chance that the next decent move is not going to be to the downside, but it's actually going to be to the upside. Of course, to confirm that, we're going to need to see a reaction, from anywhere near the trend line support, or even a small overthrow below it is not going to change my bias, and then a reversal higher and a break above the trend line resistance. In that case, I will be looking for another move higher to at least retest the previous high at 93.30. So that's what I think about the Kiwi CAD. Amalia, we have that name as well, mate. Amalia. Is that how you call it, Amira? Amalia. Then you call it Amalia. How do you pronounce it? Yes, Amalia. Okay, we have the name Amalia. I'm assuming
Amelia.
No, he wrote it Amalia, not Emilia.
No, I'm
Blake.
saying that's the only way it should ever be pronounced, ever.
As he wrote it?
No, Amelia. I'm just giving you a hard time. All right.
Okay.
Bye.
We also have it in Portuguese, Amalia. Yeah, okay, yeah. So we have that name as well. So that's what I think about the Kiwi CAD here. Speaking of which, I know nobody asked for it, but let's have a look at the Aussie CAD, since they're, closely correlated for obvious reasons. I wouldn't say that it looks that clean as, the Kiwi CAD does, but for sure 92.50 is an important support, right? It was the previous low over there. We retested it a couple of weeks ago. So above 92.50, yeah, somebody can, try being long. Why not? In any case, I think that between the two of them, I would be rather more inclined to trade the Kiwi CAD than the Aussie CAD. Ya is the Hebrew good name. Okay, and Tamal equals work. So good work. Okay. God work. Okay, got it. So let's see other questions. IBB, I'm assuming now we're turning to equities, so let's have a look at IBB. IBB seems to have broken out. Now I have to tell you, I have to remind you that I was looking at this as a possible unfinished corrective move with one more leg missing to the downside, but this seems to have been developing something different. Now I do have to wonder what this is, because the move higher is not impulsive. The prior move higher was impulsive, right? We also had this nice triangle over there. There we go. So somebody can be long against this trend line support, but I have to tell you that I'm not very much impressed by what I'm seeing here. So I'm reluctant to say that we've found a bottom over here, right? Nevertheless, against 157, if I had to trade it, I would be long, but I wouldn't trade it. I would find something that looks better. AUDC, this has broken out. I think we said it some time ago. And yes, it has broken out, right? Next upside target, this spike high at 36.80, and above that, 40.15. FSLY, FSLY. Yeah. Yeah. Not that pretty. But this looks to me like a diamond top over there, which played out very nicely. Did we actually complete the target? We didn't. Right, we didn't. That would imply a move close to the lows. After we broke down, we had this symmetrical triangle, which pointed lower, which we did get. Let's also measure if at least we completed this target. No, we didn't complete that target either. So as you see, both the diamond reversals target and the symmetrical triangles target point lower. And add to that so far the rebound higher does not have impulsive characteristics. So I would favor an eventual failure of this move higher and more downside to follow. Okay, for all the aforementioned reasons. Anything else? Anything else you want us to look at? SPWR. Okay, first of all, we're breaking above this channel, which points to a stronger rebound, right? So in essence, this channel was the line in the sand having to do with remaining very bearish, right? Because as long as this channel held, you had every reason to be very bearish, because that could be another very shallow retracement at a very decent move we've seen lower. Now the question is that enough to actually turn us bullish? I'm not sure yet. We've had the initial break from there. That's the bullish case scenario. The one I'm drawing now is the very bullish case scenario, right? The one that if you want to be really bullish, you could point to that like, oh, here's the corrective move lower. We've probably already found a low. Let's also see how much we retraced. Let me see. Yeah, we retraced, let's say roughly close to 70%. I'm not sure yet though. The start of this move higher is definitely not impulsive. We're seeing a little bit of an overthrow here. I want to see more price action before I commit to saying, yes, we found a low and we're headed higher, right? So if I was the one that would be trading it, I would wait. I would wait a little bit longer. Now, you want to be long here, I think you should be buying it there. 2650, 2670, somewhere there, right? So if you have a long bias, I would be buying it there. But I would wait for the time being. Anything else, guys, gals? Okay, NX. NX, and we call it a day. GM also, yeah, sure, absolutely. So now, strong bull run higher, but the breakthrough this trend line support in combination with this prolonged divergence clearly points to a corrective move. So the next question is, what kind of a corrective move can we actually have here? And the answer is, it's too soon to tell, but let me draw this. The good case scenario for the bulls is a shallow retracement expanding mostly in time. How do we know that's the case? Watch this channel. Now, we break through this channel and the 200 daily moving average, which is almost there, then we're talking about a deeper type of retracement, and then you can comfortably look for lower targets which lower targets would we be talking about? In my opinion, the first one that's worth mentioning is this one, just below 20. So we bridge this channel to the downside, and I think we're going to be seeing a deeper corrective move towards 20, right? And we reassess when that happens. GM. Except if you meant good morning, can you have a look at trade, which might have been the case. But in any case, let's have a look at GM. Last time we had a look at GM, it was there, as you see, in which case I pointed to the parabolic nature of the move higher, saying that we have to see some type of a corrective move unfolding soon. We did get that, but we got the most bullish type of a corrective move, which is a correction in time rather than in price. There it is, right? And now we seem to have broken higher and forming another pennant likely. So, you know, seems like we remain in bullish mode, right? Now, having to do with treat, is this the one, by the way? Is this the one? Okay, cool. I have no idea what this is. It looks extremely bad. It looks extremely bad. Now, there is a case to be made that if we found a low over there, what was the low, like 465 roughly, then you don't want to see, so if you want to retain a bullish bias here, you don't want to see this deep down below, worst case scenario, filling this gap that we left behind at 20th of May of this year. So, you know, if you want to be buying it, you can do that, but I don't think you want to see this go much lower than like 575, because then we're in big danger of seeing lower lows, right? So yeah, that's what I think about it. But in general, this chart looks very sick. So this needs to do a lot more to turn me somewhat bullish, right? I have to tell you that. And FedEx, last but not least. Yeah. FedEx. I'm a little bit troubled. I know we hit new time highs, etc. But I think this move, believe it or not, might be part of a complex correction before we can move higher. So I would be careful here. We've also broken through this trend line support. I want to see more price action, but I wouldn't be surprised if the next move is lower from here, right? And XPI, and this one is actually going to be the last. No idea what this is. A looks very bullish. B looks like it has been correcting in time. So I would expect this to break out, and the most likely direction is higher. We're in some kind of a corrective move, but most likely than not, it's going to get resolved to the upside, in which case you should look for an extension towards 238. Once we break out, I think you should look for a move towards 238. Okay, guys, gals, see you again tomorrow. Have a wonderful rest of the day. Those of you that follow soccer, I'm pretty sure we're going to enjoy the England, Germany game. So, see you tomorrow. Bye.